because we're going to focus now on some work from Professor Eric Talley, who's a professor of law at Columbia Law School and a research member of ECGI. His work is all in the intersection of corporate law, governance and finance, and his paper that he's going to present today is on gender or sex in startups and some differences that in his early work, and as I said a moment ago, all of the work we're presenting over the next 2 days is early work, and I think Eric will say that his is very much early work, but his early conclusions that there are some differences between the terms given by VCs to male and female founder-led businesses. So really interesting and really important, and then two commentators. First, Marco Ventoruzzo, who I'll call on first after we've heard from Eric. He's head of department and professor of corporate law at the Center of Financial Regulation at Bocconi University in Milan. And then I will call on Kerry Baldwin, a practitioner with over 20 years experience in deep tech venture capital, managing partner and co-founder of IQ Capital, until recently chair of the British Private Equity and Venture Capital Association. And I know that both of those discussants will have some really interesting things to say about Eric's paper. I'll pass over to Eric.
Okay, great. Okay, so let's hope that this works out. So thanks so much for having me out here. I'm Eric Talley from Columbia. This is a very early project, and just to underscore that fact, we've put that in the second line here underneath the not very provocative title, Sex and Startups. This is co-authored with Jens Frankenreiter from the Washington University School of Law and Talia Gillis, my colleague at Columbia Law School. I think she was not able to make it today, but Jens is on. One of the nice things about early projects is that we are not so wedded in anything that we're doing here that we are not going to get overly defensive when the commentators give us their excellent constructive criticisms and suggestions. So the title pretty much summarizes what we're all about here. If we need extra motivation, this is probably a not very representative, but definitely a provocative one. It's been hard to avoid the comparison of Elizabeth Holmes and Adam Newman over the last few years, as we know that Holmes was recently convicted of various types of financial crimes with respect to her stewardship of the company Theranos, which is certainly one of two poster child of failures within the venture capital-backed startup space. The other is Adam Newman, and almost simultaneously, WeWork was undergoing its own significant corporate governance implosion, in which significant amounts of capital were lost. Newman was not convicted of felonies. Instead, he was fired and given a $1.7 billion severance. And so there are obviously multiple different other factors that separate these two cases, so we don't want to make too much of this. But part of our enterprise here is to get a little bit more of a sense than the literature has been able to give us by dint of a pretty unique data set that we've been able to get a hold of that deals with governance of venture-backed startups, particularly trying to distinguish between those startups that are founded by women and startups that are not founded by women. So the question is really a descriptive one at this stage, though it obviously has some normative and prescriptive implications as well, which is, do VC-backed startups founded or led by women confront materially different landscapes when it comes to financial provisions and corporate governance than their similarly situated male founder counterparts? And this is not the first paper that has tried to look at that. Most of the papers that we're aware of have been concentrated on the funding, who gets funding, the so-called extensive margin of who's going to get funding. Ours is going to be a little bit different. We are going to take those sets of VC-funded startups and try to get a sense of to what extent conditional on funding do they face different types of governance and financial provisions within the documents that are available to us. Now, it's going to be limited because these are not publicly traded companies, so we're going to have to deal within that limitation. And so I am confident that some of the questions people are going to have are, gosh, I wish you had better data, and I just want to agree preemptively with you that I wish we had better data as well. But we're going to deal with what we have, which we actually quite like. and allow some comparisons to public companies. So our empirical strategy in doing this is we are going to basically take two large, well-known data sets. We're going to take the PitchBook data set, which a lot of people use to identify what companies are deemed to be women-founded companies. Any woman in the founder team will be enough under this criterion to constitute a women-founded company. There are other ways to skin the cat, but this is the way that we're starting. Then we're going to hand match those women-founded firms with male-founded firms that also appear in the PitchBook database and critically appear in a different database, which is the VC Experts or Genesis database. Now, the reason we're using those two databases is that PitchBook tells us which companies are women-founded, but we don't really have a lot of information about governance there. The VC Experts database actually gives us a window into the operating governance documents inside the company, in particular, their corporate charters, which have to be filed for every company and must be updated with each new round of financing. Now, the reason we're doing this matching technology is, as is well known, female-founded firms and male-founded firms may not look and walk and talk exactly the same. So we want to try to do an apples-to-apples comparison, and we end up assembling what is essentially, with our female-founded firms, a matched sample of male-founded firms that are matched on bases of industry, region, and date of first recorded round. We use a fancy pants machine learning lasso propensity score matching approach to do the matching. There are different ways to do it, but this seems like a reasonable one to do. So our universe, we're going to actually be able to look at two comparison universes, female-founded firms versus all VC startups without any matching. But what we're really interested in is female-founded firms and their close neighbors based on this matching score of male-founded counterparts. And what we're going to look at in this paper, and we've already looked at some of it, but we still have a lot ahead of us, is how do women-founded firms differ from their male-founded counterparts with respect to financial provisions, which we already have some access to from some of the databases that we're auditing their quality. Governance terms, which we do not have access to, and we are in the midst of hand coding in a way that sort of mimics a paper that Jens and I and Kathy Huang and Yaron Nili wrote last year, trying to do the same thing with charters of publicly traded companies. And then we're also able to just get a sense of the general content and do some text analysis of the charters of these companies. Numbers 1 and 3, we've made much more headway in, and number two is the thing that we're most interested in, and are also interested in figuring out ways that we can do it better than the way that we have currently designed it. Now, I want to give a lawyerly disclaimer because there are a lot of lawyers here and because this actually deserves a strong disclaimer. Matching is a good approach here, given that we're really trying to make comparisons, but we're still making observational comparisons. So even if we find differences among female-founded firms and male-founded firms, that still gives rise to some conundrums about whether that constitutes some sort of a causal claim. We're not able to demonstrate it, or what the source of those differences might be. So those differences that we see could be differences on the other side of the market. They could be differences due to some other third variable that we're not picking up. And in fact, I should even note that even if we don't find differences with female-founded firms versus male-founded firms, that still doesn't necessarily mean that female-founded and male-founded firms are treated exactly the same, because remember, we're not looking at the funding infusion stage. And so it could be, for example, that a female-founded firm is just less likely to get funded, and the outside funders are much more skeptical of female-founded firms. So the ones that actually get funding are actually pretty good, and you would expect them to have more permissive, more friendly governance structures. So that's why this project, at least right now, is descriptive in nature. But we eventually hope to get some purchase on some of these other attributes as well. All right, so let me give you just an overview of the summary of the results that we have thus far, and then I want to hand it over to the commentators for their comments. So I noted that with financial provisions, we actually do have a fair amount of ability to make some comparisons now. We're still, double checking and auditing the accuracy of the financial provisions that are in our data sets. But we find a mixed bag here, that women-founded firms tend to face less friendly terms in terms of financing provisions that are reflected in the charter, such as anti-dilution provisions, pay-to-play provisions, the creation of an option pool at the round of funding, which basically means it's coming out of the founders' pockets rather than the VC funders. But then in other attributes, women face get more favorable terms with respect to cumulative dividends, redemption rights, and the participation, or actually, I guess I should say non-participation of new convertible preferred investors. Some of these are statistically significant, some are not. So we view these as relatively, at best, a mixed bag result. They are, somewhat weak in their ilk. On governance provisions, this is actually what we're working on right now, and I'll give you a little flavor at the end for what we are doing. But here we're trying to hand code data from these various versions of the charters on board representation, veto rights, voting privileges, and so forth. And then finally, we're kind of excited about the governance part because we've done some computational text analysis on these charters. And we actually think from that, we're still trying to discern the source, obviously, but we think that there is definitely some reason to think that women-founded charters are discernibly distinct from their male-founded doppelgangers. And those semantic differences are not attenuating over time. If anything, they're growing over time. So that gives us some reason to think that we probably are going to find some differences in governance provisions, though we haven't fully documented that now. We're only about 10% into the coding process. I'll show you just a little bit of eye candy here in terms of how we put these match samples together. If you look at the lower left histogram, that's essentially a histogram of both the female startups that are the ones that are in kind of red, the matched male startups, which are the ones that are in green, and then all male startups are the ones that are in blue, the ones that were not matched. And you can see that just comparing female to male startups, the advent of female entrepreneurs in VC-backed startups is much more recent than male entrepreneurs. So we'd be looking at a lot more legacy entrepreneurs if we just did an overall comparison. So that's one of the reasons why we really wanted to do this matching sample. Once we get rid of the all male and focus only on the matched samples, you can see that this histogram in the upper left is a lot more balanced in terms of the timing of the first deal date, the first investment that's recorded in the VC experts database. On the right-hand side, we basically, within our match sample and our female startups, we actually then try to look at differences amongst a whole bunch of different observable attributes just to see if there's balance among these covariates. And for the most part, we seem to have pretty good balance in the covariates. There are a couple of differences, but they don't strike us as overly concerning given how many different attributes we're looking at here. So we think we've got a pretty good balanced panel. Obviously, we can work to improve that more, but thus far we're pretty happy with this panel. Overall, we have just under 400 female-founded startups, and therefore, on a 3-to-1 basis of matching, we're going to have 3 times that in terms of male-founded startups. There's the amount invested, the log of the amount invested, and you can see that that is also relatively well matched, though the mean of the female-founded firms is slightly lower than that of the male-founded counterparts, and you can see that a little bit in this chart. Okay, this is a very busy chart, and I won't spend a lot of time on it, but this sort of goes over the different types of financial provisions and tries to get a sense both with the matched male startups, those are the green, the female-founded startups, those are the red, and then all male founded startups, those are the blue, just the different incidents of a bunch of different financial provisions that we see inside these charters. I think this is based on the first observed charter because with a lot of these companies, every round, we're going to see a new updated charter. So I think this is constrained to the first one. And, the apples to apples comparison is comparing the green to the red bars, the male founded and the female founded companies. And you can see that there aren't gigantic numerical differences. There are some situations where we can find statistically significant incidences or propensities But we're not seeing gargantuan differences that would make us think, wow, this is just a completely different landscape in terms of the financial types of provisions that female-founded firms are facing. Here's pretty much the same story told in a possibly busier and more confusing regression approach. But the third and fourth variables here are the ones probably worth looking at. And I think this is really also just in the service of descriptive accounts. Both female-founded startups, and we also have an interaction with it, which is whether this was after the big story, the Wall Street Journal story on Elizabeth Holmes broke or not, and whether that had some effect on certain of these financial terms. And we see a little bit of action here, but I would say that the overall slant of this is that we're not seeing enormous degrees of differences. Sometimes the liquidation rights of the senior preferred, there seems to be a little bit of activity there, though it's mixed depending on female startup or female and post-home startup. But a lot of the other places, we're not seeing a huge amount of difference, or that difference is, I guess, like I said earlier, a mixed bag. Last thing I'll comment on, and then I'll hand it over, is that we have been able to do a lot of work on the semantic content of these charters to get a sense on this is a panel that sort of traces both the female-founded firms and the male-founded matching firms over time in terms of charter length, readability, and something called a type token ratio, which is really just the variation within form. You can see that generally both have grown lengthier over time. They've gotten more lawyered and less readable over time, and there's less variation within these documents over time. They've gotten more boilerplate generally, but that doesn't mean that there isn't some variation that we can take advantage of. And by the way, these trends are not exactly, but they mimic relatively closely trends that Jens and I and Kathy and your own have seen in publicly traded charters as well. Another thing you can do with the text of these charters is you can, this is going to sound strange to non-machine learning folks, but you can squish down the semantic content of these charters into two dimensions using principal component analysis and singular value decomposition, and just essentially chart the main two areas of semantic variation in a two-dimensional chart that we can all stare at. Here, the women-founded firms are the light blue, the male-founded matches are the gray, and this is overall, and you can kind of see that there's there is a lot of mixing and matching going on. So we're not seeing a lot of tight clustering of the women-founded firms away from the male-founded firms, but that turns out to be there's more to the story there that I'll get to in just 1 minute. This is pretty much telling the same story, but over time. So we're actually able to move forward in time and look at how those clusters move around as companies maybe go out for new funding and they change their charter, and so the content of their charter is changing. You see the mixing and matching and non-isolated clustering going on through time as well. So it's pretty much the same story that the earlier slide told, though I got to tell you, when Jens put these animations together, I was like, I got to show this because it just kind of looks cool. So, but we're not seeing a lot kind of on this aggregate level. However, and here's the thing that we're kind of excited about, I guess, on some level, is that we can also try to train a machine learning classifier to take only the text that's inside these documents and make a prediction about whether a document is a male-founded firm or a female-founded firm, just based on the text of the document. And there, we're actually able to get a little bit of mileage, just trying to train an automaton to make these predictions. And in particular, there seemed to be an entire cluster. You can see them over here on the lower side of this right-hand side graph of our matched charters, in which we're pretty much able to identify them as a male-founded charter with 100% accuracy, with no false negatives or false positives associated with that assignment. On the other end of the spectrum, it's a little bit more of a mix and match. So it does suggest to us that there are some male-founded firms that are getting provisions, or at least that are getting structures that female-founded firms just can't seem to get or don't seem to get. And we're in the process of trying to figure out on a provision by provision basis what that looks like. Now, here's another version of us trying to predict whether something is a male-founded versus female-founded firm over time. We just slice our data into 4 units of time. And these are all measures of how well do we make the prediction. Probably my favorite one is the area under the receiver operator curve, which is the one on the bottom there. And you can see that over time in our data, we're getting better and better and better of being able to discern, is this a female-founded firm or a male-founded firm, solely from the text of the charter. So we think there's something here. We actually think that our treasure hunt this summer is going to yield some results, but we're in the middle of that right now, and this is pretty much my last slide. We're going to try to, the next 2 months, we're going to spend basically continuing and hopefully finishing coding these governance provisions to try to get a sense of what we can pull out of them. We also can cut, slice, and dice the data for different traits. We can change our criteria, what constitutes a male-founded firm versus female-founded firm, so say majority women-founded firm, add more data. We might be able to add race, ethnicity, LGBTQ status, and so forth. We may be able to add some attributes of the other side of the market, of the VC funds, which we have not included in this study. We're kind of hoping to push that to the next paper, but certainly we can do a little bit of that. And I think Kerry's going to talk a little bit about the lawyer matching process, which we might be able to say something about. This is I do not mean for you to read this, but this is just a chart of our rubric, and this is kind of what we're in the middle of coding up right now. I may come back to this, but I'm just going to end my slideshow there and hand it over to Marco and Kerry for comments. Thanks so much.
Thank you so much, Eric. That's fascinating, really important work, and really fascinating the way you're approaching it. So yeah, let's go straight to our first discussant, Marco. If you want to, if you want to have your 10 minutes now, but before you start, just to remind everyone, please, comments in the chat, queue in the chat if you want to be called on. Comments in the chat, even if we don't get to them, will be captured. Marco, over to you.
Thank you. Thanks for having me. First of all, Eric and his co-authors clearly win, hands down, the prize for the best title, which also makes me wonder exactly what drove the organizers to ask me to comment on this. But I would just throw a couple of soft balls to Eric, and probably not take the entire 10 minutes. Also because I asked not 1, not 2, but 3 of my colleagues, statisticians, to find any kind of possible flaw and be as mean as possible, but they were not able to come up with anything that would make me sound like an omniscient lawyer slash econometrist. So the first thing I would say is that, at least so far, I mean, I understand that obviously they hope to find some stronger correlations, but in a way, there's at least a part of this that is one of those, we might say, no correlation papers. It might be that the answer to the research question, or at least some of the answers are, there's nothing there. And I really almost resent this idea in fashion that you always have to find a correlation because that sounds cool, that sounds more, it's superficial, it's and very often, quite frankly, scientific discourse advances more when you verify and nullify certain hypotheses. So I kind of appreciate, if you want, the candor with which they present the absence of certain elements, rather than going looking for some weird and possibly not very meaningful correlation just to take stock of the R squared. The second thing is that it's obviously somehow surprising and might at first sight sound slightly contradictory, the fact that, if I understood correctly, you seem, at least so far, not to find meaningful differences based on gender in terms of cash flows and other economic rights, but there might be something concerning governance. And the two actually questions more than comments to the authors are, well, the first is maybe obvious, but in fact, there might be a much stronger link than we imagine, in the sense that obviously the very distinction, even if you want theoretically, from what are cash flow rights and what are governance rights, is sometimes, at least at the margins, blurred. And independently from that, you can have certain types of cash flow rights or economic rights that, in fact, concretely are very much dependent on governance rights and prerogatives. So, it's obvious, but there might be some relatively flexible provisions concerning appraisal rights or dividends that, however, you can steer in one direction or another, depending on what kind of governance rights you have. So that might be an explanation to point out that, in fact, there are differences, not looking at the rules in the abstract that are written in the charter or in the agreements, but rather in the way in which they are applied, exactly due to governance rights. The second question, I'm starting very slowly and with all my limitations to talk with colleagues that do natural language processing and so forth. We have a couple of papers that, we will probably never finish. So I'm fascinated by that, but also very ignorant. And my question was whether there's a possibility that the semantic indications that the algorithm gets are purely grammatical. In fact, I think in English it's harder than in other languages, but I was wondering whether you might be capturing simply things that are inherent in the grammatical structure of the sentences when on the you are somehow referring directly or indirectly to either a male or a female. My guess is that probably it's sophisticated enough to get rid of those possible effects, but I was curious. Another point of the three hypotheses that you advance for the differences that you might find, personally and without any particular analysis, I'm drawn to the first one, the idea that there's a sort of higher selection or discrimination at the investment stage. And, we are all familiar, I guess, with the experiment of the auditions for the, I think it was the Boston Philharmonic Orchestra, where, the jurors would hear the heels of the candidate even without seeing the candidate, and they would consider female candidates not so suitable, especially for certain instruments. So I would be, if I would have to bet, I would bet on the first one. Which in a way is also connected to another broader phenomenon, which is the relevance of informal mechanisms of governance that I think end up being more in the area of sociology, if you want, or psychology, and they're extremely difficult to gather, especially with those kind of researches. And we all have seen it in one way or another. I would just mention one thing. When when diversity on the board of directors grows, not only gender diversity, but also other dimensions and of diversity, there is a kind of at least anecdotal effect of shifting the actual place in which certain decisions are taken to, let's say, less diverse inner groups or good old boys groups. This it sounds harsh and ugly, but I think it's sometimes true. And so there are maybe those kind of informal effects that are hard to capture, but that are extremely relevant. Finally, about the possible differences that you might find, especially with respect to governance. I wonder whether a big explanation might be rather who drafts these documents rather than the fact that there's either a male or a female entrepreneur behind the startup, because as you know, I've been introduced in my academic capacity, but also as a lawyer, very often, especially on certain terms, they are actually managed by the lawyers. There might be 3 or 4 things that the parties care about. So I wonder whether that might not somehow throw a wrench in the reasoning and be relevant, or other variables. And I think in the chat was mentioned, I briefly saw it, for example, industry. If it's true that female startuppers are more active in certain industries, and in those industries there are certain approaches to certain rights or other kind of whatever covenants, governance rules, charters, and so forth, maybe it might be that one explanation. I believe I've kept my promise to take less than a minute.
Perfectly timed. Thank you very much, Marco. You actually a brilliant segue to Kerry Baldwin, who's next, because I know that she wants to make some comments about who drafts the documents and the role of lawyers. And you make a great point there, Marco, and I think a few people have also made it on the chat. I just wanted to intervene with one quick comment, which is that to echo what you say about what's written on the document versus what happens in practice in relation to governance. In my work on corporate governance in private equity-backed companies, I've very much found that what you see written down and how governance operates in practice are absolutely not the same thing. And what's written down is often from a precedent document produced by a law firm or by a VC firm, and actually bears no relation in practice to how things really operate after the investment's been made. Anyway, I'm going to quickly hand over now to Kerry. As I mentioned at the beginning, huge experience of dealing with both female-led and male-led and balanced startups over the last 20 years. So Kerry.
Thank you. And yeah, great comments, Marco, as well. And I agree with your observation on diversity on boards. And I absolutely agree on drafting in law firms. So I'm going to come to that one in a moment. So Eric, it's really important to be collecting this information, and you've made some really interesting observations on your data. It was great to see the data in the financial provisions comparisons, and I really liked your clustering, and of course your animation was great. So super to give the paper some life. So I'm just going to step back a little bit and just go through VC, because what we're dealing with here is we're dealing with companies that got funding, but there's a whole load of companies that are not getting funded, and why. So I'm just going to step back just for a couple of minutes and just talk through that. So diversity is really important in our venture ecosystem. And we in the UK, we've got Diversity UK, British Business Bank data. We're really collecting as much research as we can. We've had the recent Rose Review. And we're looking wider than females as well. We're looking at underrepresented founders as a whole. So our data in the UK is we've got 5% of seed funding last year went to all female teams, and ethnic minorities received less than 1%. So there's more that could be done potentially with some research in other papers. Now, why is it important? Because we do know that when we have mixed teams, you're getting better decision making. And some people are saying we're getting actually better returns, but that data will come over time. So it's really important. And where does it all start? It starts in the VC's IC. So in that investment committee is where it all happens and the processes within firms. And a lot of people are collecting data on the diversity inside venture capital firms. But let's go a bit deeper and really distill that into what is the actual composition of females sitting and decision-making on investment committees? Because that is what is making these companies get funded or not funded. And I really want to have a look and someone to look at that data at some point. Who is actually a decision maker within VCs? And it'd be lovely if you're able to get some of that from your data, Eric, and layer that in as well. So I'm going to just step back and just talk about VCs and what VCs are looking for very quickly. As a practitioner, do I see any differentiation on terms? Where I'd encourage Eric to keep diving or adding to his fantastic research. And then I'm also going to do a brief comment for any female founders that might be listening in today, or some comments that you can share with female founders if you're all from law firms. So hopefully all of this research will actually lead to improving the quantity and diversity in the ecosystem as well. So what's a VC looking for? You know, most VCs are looking for a dragon in their portfolio. You know, that's a company that pays back their whole fund. Now, some people think that's just unicorns. I mean, all we all ever hear is just purely about unicorns. But actually, it depends on the size of ownership that a VC ends up with when the company exits that portfolio company, and also the size of the VC fund that needs to be repaid. So we must think in terms of dragons a lot of the time. And that actually widens the pool of how many companies can be funded and from what backgrounds. So of all the thousands of founders that I meet and advise in a year, and that's male and female, how many can actually grow to become a dragon, or their business model is suitable to be a dragon? And in reality, very few. So all VCs have well-constituted practices and internal processes where we gather data, we look at why things dropped in and out of the pipe. Why do they fail to meet parameters? Why do they drop out? At IQ Capital, for example, most of our companies drop out the pipe on defensibility of technology because we're a deep tech firm. So most VCs have model documents. So before we issue a term sheet at IQ Capital, we go through and we walk the founder through our term sheet and we say, this is what you're going to see and this is what it means, because we're going at seed and A. And often these founders have never even heard of some of these terms, and we are literally showing them how a cap table works and how dilution works. And it might surprise a lot of you on this call, but I'm sure you'd have to spend equally as much time explaining what all these terms mean. So there is more that can be done in that, in educating, and that probably accounts for some of your clustering that you're seeing in your research and data, Eric. So the model document is there. That is the term sheet that is issued, and then it goes over to the lawyers. You know, let's be very clearly at that point. And that is where I'd really like you to dive in. And everyone's touched on it so far in this session. Not everything in that term sheet gets through. Lawyers are representing the companies. And I wonder what is happening at that stage. Are lawyers pushing back? And there's a lot of discrepancy from the term sheet to what actually ends up in the documents. Can we capture that at all at any stage? But we really need to understand what is happening at that stage, how much pushback. And I would really like to look at the quality of the firms that these founders are taking advice from. Are they legal firms that deal with lots of different types of funds, therefore they can take best practice, what is norm, what is not norm? And also, VC is so cyclical as well. And sometimes you're in a cycle where it's very founder friendly, and a lot of founders are getting more things. And then when the market pulls back, you know, you see terms that are a little bit more onerous. And I think it's going to get a little bit worse over the next year as well. And I think we've already seen, I'm sure a lot of you have seen in things that you're issuing, Series B funds really starting to create horrendous pref stacks in rounds that are going through at the moment for founders. So as a practitioner, do I see any differentiation on terms between male and female founders? In short, no. We use model documents based on the BBCA's Series A documents. It's really important for a fund at our stage and others in the ecosystem not to be overly loading these legal documents on these founders with lots of complexities, because they would just get unraveled at Series B. And a lot of these founders must understand that at Series B, often whatever were your incorporation documents or your SPAs, they're ripped up and started again at Series B by that lead fund. So I'd really like to see just how much the documents change between the Series A founders and whether they're completely new docs at Series B, Eric, at some point. Now, when do founders have the most leverage? Now, this is a really obvious one to say. They have the most leverage when we've got a hugely oversubscribed round. So you might see some markers in your research there, Eric. Just look out for, have you got lots of shareholders coming in there? Have you seen the existing shareholders be massively compressed and not being able to take their full pro rata? Little things like that, you can probably infer it's a company that it's flying. You'll see the share price massively lift up at that as well. And I think at that point, you sort of start to see a few more terms that are a little bit more founder friendly, let's say. So for me, where would I encourage Eric to keep diving or investigating a little further? We've touched on the types of law firms. Really, really look at the quality. They are the defenders for the founders team. Yeah, going into that transaction, you are defending that founder. Do the term sheets differ from final documents? Go a bit deeper in some of those consent rights you might have, and I haven't seen it, such as what threshold does a founder team have to ask the board for permission just for recruiting a new member of the team? I see it sometimes as low as 70K. I see it 100K. I see it 150K. Is there something in that between the differences there? Look at warranties. Are we seeing a multiple of salaries here? Is there a discrepancy there? Are REMCOs and audit committees being established really early at seed and Series A? That would probably tell you they're using a decent law firm, and these things are really important to VCs, yeah? Frequency of board meetings is very interesting and how that changes over time. Tell you a lot about the governance nature. It's a soft metric, but you're seeing a lot more SPAs and that people are going to quarterly board meetings, or 8 per year rather than that monthly. That will tell you a little bit about what's going on in that company there. And of course, I agree with everything that Marco and everyone else has said here on the chat here, looking at the sectors. The sectors tell you quite a lot, but I'm sure you're correlating all of that. Good and bad levers, I see a lot of discrepancies in there in the documents. So we might want to have a look at that, where the anti-dilution rights are really kicking in. And the quantity of funds, I think, coming in each round could really be giving you some good markers. And are they tier ones? What else would I go for? Looking at protections for minors, minority and early investors. Are they changing and getting swamped out in later rounds? Good and lever, bad provisions. The size of the option pools. We could dive a little deeper into this and look at some of the rights on those options. Do we see accelerated vesting? You know, what are the rights on exit? Really look at those sort of rights if you're able to get hold of those documents and other provisions there. And are they resetting vesting provisions when new investors come in? That's the thing that we're starting to see a little bit of at the moment. I'm going to skip through a lot of the other comments I have, but I will share them with you. With corporates, look at the ROFOs. Looking at other markers within those companies, you could correlate with a few other databases here. You could look at IP, innovation grants, and R&D spends from their accounts. That would probably tell you quite a lot about that company, whether it's tech and it's really sort of becoming a leader in that field, and therefore you're going to expect to see a lot of interest in those companies, or whether it's just growing at that sort of organic level. Pitch decks, I think, are hugely important. It'd be great to run some of your work on your pitch decks and saying, you know, can you look at whether the female-only pitch decks are not as strong as some of the male ones? Are they visionary enough? I mean, I've got a few thoughts on that one, that's for sure. I thought it was interesting seeing your Silicon Valley, 73% I think I saw on that slide, saying the majority of the females are there. Why is that? That's an ecosystem at play. That's an ecosystem where they're able to access early funding, more diverse funding, accelerators, incubators, get the best terms potentially, all of this stuff. But I'm just going to stop so we can answer some of those questions. There's so much more I'd love to say. It's fantastic data, and you have to start somewhere. And if I have any comment for female founders listening in, or for the law firms that are advising female founders, make female founders reach out to VCs 9-12 months before the round. Most companies that ask me for a comment on their board or their pitch deck is 8-9 months out, and they're all male teams, always. So the first time I meet a female team is in that first deck. There's no connection. I've got no history with you. And stop sending your plans directly to the managing partners. Find your champion inside a VC. It could be an analyst. They're going to champion you through the process. Anyway, but great research, and thank you so much for inviting me today.
Great comments, Kerry, delivered so brilliantly. Thank you very much for that. We've got about 10 minutes left in this session before we go to our first break. And I wanted to do read the chat, because there's some really interesting stuff going into the chat. And Eric, you might want to pick up on some of that, as well as perhaps some of the comments that you've heard from Kerry and Marco.
Yeah, that's great. As long as you can hear me, which I take it you can. So
yeah, we can hear you fine.
Yeah, so I see, even though you can't see me, I see both Jens and Talley on channel. So I want to have, they may want to take a swipe at this as well. Just a couple of things. The law firm effect is something that we may be able to get at with this data set. And we have had a couple team meetings talking about that. You know, as I put in the chat, it raises some issues about, well, maybe it just moves the ball a little bit, and we have to understand what gives rise to that matching process by which male or female founded firms migrate to specific law firms. But it absolutely is something we can accomplish here without layering on another data set. It's definitely the case that that our strongest piece of textual data here is going to be these charters. Term sheets generally don't have to be filed with the Secretary of State's office. Employment agreements generally don't have to be filed. So if we got them, it would probably be by fortuity and happenstance with respect to some of these companies. Query whether some selection bias gives rise to who's willing to give those to us or not. You know, of the things that Kerry mentioned, getting the pitch decks of the entrepreneurs might be a particularly interesting thing to do, and we might be able to do that with some subset, probably more on a qualitative basis. A couple of other things that, you know, I as I mentioned in the presentation, the other side of this market, the investment committees and VC funds, what's going on there? To what extent are they, you know, basically differentiating what they're doing in a way that may be responsive to what we're measuring here? It's clearly something we need to be chasing after. Now, we're hoping to make that the next paper, since we've got a lot of recipient side data that we're dealing with here, but obviously is only looking at half of the picture. There were two comments that were made in the chat that I just want to comment on quickly, and then hand it over to Talley and then Jens for any comments they have. One is on clustering. Whether we see sort of gender-based clustering into particular industries or sectors. I think what the answer is yes, we do. However, one of the things that we did when we did our matching, and this is either a feature or a bug, we've always thought it was a feature, but it could be a bug with respect to this question, is we match partially based on what industry you're in. So if we see a female-founded firm, we're the only eligible male-founded firm. Well, the ones that are most likely to be eligible are ones who have also gone into that same industrial group, which may be, you know, picking on a relatively small number. So our match sample is not going to be able to pick up that clustering, but it does suggest we might want to at least do a few iterations of analysis on the clustering part. Casemiro asked also about sort of normative implications, and I view that, Casemiro, because he's a friend of mine, is sort of in a friendly way calling me out on, well, what are those normative implications, which is of course something that we're not really prepared to answer at this stage. One of the things that's hard about this particular, you know, about any work on sort of differential treatment or discrimination that involves multiple stages of decision making, does someone get funding or not? If they get funding, what kind of terms do they get? Do they then get a second round? If they get a second round, what kind of terms do they get? This can give rise to kind of a sort of a circus of interpretational challenges, right? If say female-founded firms are disadvantaged at the recipient phase, might that mean that disadvantage could manifest itself in an apparent advantage when it comes to governance and the provisions that get baked in, because, you know, only the very best female-founded firms make it through the sluice gates. So we're going to have to figure out how to do it. I think episodic moments, something that Kerry and Marco both mentioned, of of more competition in the VC space, maybe enable us to tease some of this stuff out. I'm going to hand it over to Talley and Jens for other comments, but I want to thank Marco and Kerry. These are excellent comments that you couldn't see me, but I was hurriedly taking notes because these are terrific comments.
And I know I sound like a countdown clock, but we've got 5 minutes left. My main job is to keep us to time, and I want to make sure we get as many comments as we can. So, but yeah, Jens and Talley, it'd be great to hear your thoughts. Who wants to go first? Talia.
Yeah, I'll just mention, so thank you so much, Marco and Kerry. This was so fantastic, and does give a sense that there's kind of so much more we need to kind of learn and know about both the VC side and the startup side. Kerry, I particularly liked your idea of kind of thinking through whether we have some observability into kind of the functioning, not just on the paper, but how it actually functions. And one of the things that we see, for example, who from the VC is appointed to the board of the startup. And we have various kind of bits of information about that, and I think it's something we should definitely kind of dive in more to kind of understand how exactly that works. And the same thing goes with kind of decision making on the VC. We see that a bit also from PitchBook, and so I think that would be a great kind of addition to the type of analysis we're running now. So thank you so much for that.
Yeah, I have little to add. Thank you so much for the comments. These were all fantastic. I also like the idea of looking at what are the companies that see the most drastic redrafting of the charter between the first two series, or we can expand it and maybe also look at changes between B and C or something like that. But this is stuff that we can do with our data. I'm very excited. But I don't want to take up too much time because I know we're running out of time, and I'd rather have a couple of other people come in and comment than talk for the remaining for the remaining few minutes myself. Thank you so much.
Thank you. Does anybody have any comment? Marco, Kerry, do you want to add any final words? We've got a couple of minutes left if you do.
Just well done and thank you. And it's so important for the ecosystem. And some of these learnings, as I said earlier, are going to help other females and underrepresented founders pitch better. Don't accept that term. Don't accept them. So even if your research doesn't end up solving the most magic piece, a lot of this, please publish and do something with this to help other founders make sure what they are getting. You can change the ecosystem. This is great.
I just second what Kerry said.
I'm really interested in this idea that there might be a difference in the way females versus males select law firms, because I can't work out at the moment what the hypothesis is for what could explain that. I mean, I agree that it's an interesting explanation, but I can't at the moment figure out why there should be a propensity for males to select kind of higher quality, more experienced legal advisors than females. So I don't know if you had any thoughts on that, Kerry or Eric, but it seems to me that's a really interesting area to explore, but I can't figure out why it might be happening.
It's cost. So at seed round, you've only got a certain amount of money. It's cost, and they're trying to save money. And when you've been on that breadline, putting your company together, every employee you do, every decision you make, it's cost. Whereas sometimes you do see other founders saying, right, I'm just going to go for the best at every stage. So I'd say it's cost. So all the law firms, please have a really sensible price that you can charge first-time founders. And it does make a difference because you'll have so much work from them going forward. If you just do that very first stage right, you change the ecosystem and you build goodwill for all of those follow-on rounds, exits, and all the other complexities that happen. So
and I see Talley has made a great comment in the chat too, which is that it may be about networks. So maybe that male founders have better networks and more ability to source experienced lawyers. That could, I agree. That could be what's going on. Look, really interesting session. Great paper, really interesting work. This is obviously a huge issue, and it's multifaceted, as everybody's said, and this paper is just addressing one aspect of a multifaceted problem, but really important to do that. One of the things I really hope happens as a result of this conference is that the people talking to each other now keep in touch, and as these research projects develop, that there's an opportunity for further discussion and comment. So I do encourage everybody to try and make use of the connections that they've made today and the engagement that people are having with their work to follow up afterwards. It's 5 past the hour. We're now going to move to a 15-minute